Hey everybody, today in this video I'm going to go over how to properly draw key levels. And the reason why I want to start off with this video is because when I started trading, I had a lot of trouble finding the correct key levels. I draw a lot of lines all over my charts and price would just kind of go through them. And the mistake is I thought levels were exact points that prices had to react off of, but in reality, they're not perfect lines or perfect price levels. They're more like areas or zones that we pay attention to. So think of them more like zones where other traders are focused and where confluence builds. So one of the key things when drawing zones is you need to understand which time frame to draw the correct zones on. So as a swing trader, I primarily focus on higher time frames. So for me, I mostly care about zones on the daily and the weekly time frame. So these higher time frames carry the most weight and also drives the cleanest and biggest moves. So if you're more of a day trader or a scalper, that's fine, but just make sure that you adjust your key levels down to the correct time frame. So, but the principle is the same. You always want to build your key levels off of the higher time frame relative to your style. So now this is how to spot a key and correct key level. So for me, this is the SPY chart SPY, and I'm going to start on the daily time frame, just and draw a couple key levels and kind of just explain how I spot these key levels. All right, so let's start on the weekly time frame actually. So on this chart, we can see that we have a local high right here, right? So this was a high created in 2022, 2021, and this was the local high, and it stayed a local high for a period of about one whole year. We didn't break it until about January of next year, and you can see that once we broke it, so first price tapped into this area right here, rejected a little bit, but once it broke across of it, it pretty much went in a parabolic move before retracing a little bit, right? So right here we have a area where the key level acted as resistance. Right here, a little bit of resistance. And actually during the 2025 tariff news, we can see that price bounced exactly off this area, almost down to the dollar, down to the penny. All right, so this is starting from the 1 week time frame. So if we zoom in a little bit, we can also see we have another key level right here. So right now the market is trading a little bit high. It really hasn't retraced much since the tariff rebound. So if price eventually does retrace, this would probably be a good confluence that price could bounce off of, right? So that is using the weekly time frame. Now let's go down to the daily time frame. So it's pretty much the same thing. Um, so right here, we can see that we have an area right here where there is a reaction after coming in contact with this rough key level. So right here, we had an area that acted as resistance. Price came up to this area, it rejected, price went above, retraced, tapped back in, acted as support, went up, retraced, acted as support. And even during COVID, this area was not too strong. It blew right past it and eventually came down to a lower time level. But you can see that after price retraced up, moved up, it actually retraced to this rough area and really respected this key level again. So this is another key level, right? So we can see that we have one here. We have multiple reactions here, here. And this is a clear rejection right here. This is some sort of consolidation near the zone. So one thing about key levels is they're not always exactly perfect levels. So they're sometimes more like zones. So you can see like right here, we could technically draw another key level at this point right here, but I would prefer not to do that because to me, it makes charting a little bit more unclear. And when prices approach these areas, it makes decision making a little bit more difficult for me. So when we have two key levels that are really close on our relative time frame, I like to just keep it simple and just mark one and just be aware that price could retrace, close to that zone on the lower time frame. So I hope this level, or I hope this example of key levels help. So don't really think of key levels as exact price points. They're more of zones of interest and areas where we watch price, stack confluences, and plan trades with confidence.